Hey everyone, I hope you're having a great weekend. This is your market snapshot for June 1st, 2024. So we're going to start off looking at the SPY last week. Last week was a holiday weekend, so Monday was not a trading day, so we just had a 4-day week. And last week, Tuesday basically was flat. Wednesday was a down day. Thursday was a down day. Friday started off down, and then we had a pretty nice rally, especially going into the end of the day. This is a 1-hour chart, and basically in the final hour, we can see the SPY went from 522 up to 527. So roughly a 5-point move. That's a pretty large move in the SPY, especially in just 1 hour. And then if we want to compare that to the Qs, it actually looks very similar. The Q actually ended down a little bit more than the SPY did last week. And then the IWM actually did the best of all. And the interesting thing about the IWM is actually on Thursday, it was actually up. As compared to the other two tickers that were down on Thursday. And the IWM actually finished the week just a hair higher than from the previous week. And we can see right here, the SPY finished down 0.39% last week. The Qs down roughly almost 1.6%. And the IWM was just up slightly, 0.16%, so it actually finished the week in the green. As far as some news events next week, pretty much every day you've got a few things that could move the market early in the morning. For the most part, it's between 8 and 10 every day. So we have PMI on Monday, manufacturing PMI, job openings on Tuesday, non-farm employment on Wednesday, and then services PMI at 10, unemployment on Thursday, and then non-farm unemployment rate on Friday. Now, like I say, all this stuff happens early in the morning, except for a few of them at 10. So you may want to watch out for those. So if we want to look at maybe some cash secure put trades, so this right here is a couple of ETFs that I have made a list for here. We're at 48 days to expiration. The strikes are off 4% out of the money here. So we have the SPY, IWM, QQQ, and the list goes on right here. But this is 4%. If you want to pause this, you can. Like I say, the actual put strike is right here. We have the bid and the ask, the actual return on capital, the annualized return. And like I say, these are at least 4% out of the money. If we want to go more, let's say 6% out of the money. Let's let this load for a second. So that's loaded up. And you can pause this as well. That may give you some cash secure put candidates. And then as far as just, this is the S&P 500 stocks that have weekly options. And this is also 48 days to expiration, 5% out of the money. And I'll just scroll slowly through here. So if you see something, you can pause it. Everything actually is in alphabetical order right here. So you can look. I do have some earnings listed here. If it's greater than 30 days, my scan just shows 30 days. So it's going to be at least 30 days away. And another thing, this days listed here is going to be actual trading days and not calendar days. So if it says it's 5 days away, that's going to be 5 trading days away. But that's that list. And if we go back to the SPY, I wanted a few things here show you. We have a couple of longer term trend lines. I go to a 4-hour chart. So this is actually the longer term trend, starting from the downtrend up. So this is all the way back to April 19th, April 18th, right in this area. And this shows our upward trend. And we can actually see that last week we came down close to the bottom of it. So this would have actually been Friday right here. This is a 4-hour chart. We got close to it, but we're still just kind of right in between this range here. So kind of everything is happening normal is what I would say. One interesting thing though, we go to a 1-year chart. Okay, so what I've done is I've actually brought up the weekly expected move. This is the SPX. And if we look, we can actually see this, this shows roughly the expected move as of the start of the week. And, 68% of the time, we kind of stay within this range or close within this range at the end of the week on Friday. And if we look, an entire majority of the time, we're closing outside of it. We're trading outside of it at least once every week. So last week, we were outside of it both on Thursday and Friday. The week before, we were inside of it. But the week before that, we were outside of it. The week before that, we're outside of it. The week before that, we're outside of it. We're outside of it here. We're outside of it here. We're outside of it here. We're outside of it here again. We're inside and then outside right here. So what you can take away from this is that the market is moving a lot more than I guess what is being expected to move. So if you're a short-term premium seller, you're probably having a hard time right now getting run over. So, just be careful out there when you're trying to do those types of trades. Most of my trades I try to do now are just directional. If I see the trend is going up, I'm only taking directional trades to the upside. Or if I see the trend is going down, I'm taking directional trades to the downside. I'm not really doing like iron condors and butterflies and things of that nature, which basically just you want the market to do nothing. I haven't done those actually in a while, but I just wanted to share this, kind of why I'm not doing those. So anyway, that's all I have for you this weekend. Thanks for watching. Have a great day. Bye.